Sir, we have one golden session. A golden session. So, thank you so much, Dr. Santosh. Absolutely remarkably aggressive and intensive presentation on equity picking, stock picking. We have a couple of questions, unlimited number of questions on stock, but we'll take them at the end. John C. Rockefeller used to say that only gold and silver are real currency. Rest everything is credit. Your currency notes are credit, your bonds are credit, everything is credit. So today we are going to demystify investing in gold. So golden presentation by Dr. Nitin. Over to you, sir.
So now we are coming to the gold part of the grade, as Dr. Chetan has already spoke about gold, real estate, equity and debt. Why we need gold? To diversify our portfolio. It can be hedged for liquidity and equity and inflation. And there are two types of gold: physical gold, which we consider as an expense, and paper gold, which we consider as an investment. In paper gold, we have gold ETFs, gold MFs, mutual funds, and gold bonds, which are like SGB, 7-year gold bond issued by Reserve Bank of India. So what are paper golds? We have gold ETFs. ETFs is nothing but exchange traded fund. These are the passive funds which tracks domestic physical gold price. You can term as e-gold, and these are traded just like shares. But you need to have a Demat account for that. Each unit is backed by physical gold of 99.5 purity. An example is gold bees. There are various other ETFs, but the liquidity is more in gold bees, so we prefer gold bees. What is sovereign gold bond? It's introduced by Government of India in November 2015 to control our urge to buy physical gold and to offer investor a better alternative to physical golds. And these, as already told, is issued by RBI, and you can invest minimum of 1 gram, and price is usually average for closing price of previous 3 days, and there is some concession for online buying. And these tranches are usually released by every month or 2 to 3 months by RBI. Next is in the second week of January. So we'll compare how gold works in our Wealthcon manner. So we have this mnemonic by Dr. Ram. It's control R. So C stands for cost, tax, liquidity, risk and return. So what is cost? Physical gold, it's most costly, and apart from its cost, you give 10% more for managing it. That's mean that there is some type of necklace and you buy it, there will be 10% making charges, and the fashion of that necklace goes off in 1 year, 2 year, 3 year, and then you go again and try to make a new fashion type of necklace, and you again pay 10%. So that's the more expenses you have with gold. And there are different charges. If you want to save it in the lockers, in bank lockers, you have to give again banking charges, and there will be GST. Compared to gold bees and SGB, these are relatively cost effective, and there is very minimal expense ratio for ETFs, but there will be some charges of brokerage by your Demat broking account holder. And SGB, which actually you will get 50% less price as a market, and there will be 2.5% annual interest credited directly to your bank by Government of India. So taxation was already discussed. We all know STG is as per the IT tax, short-term capital gain, and long-term capital gain will be 3% with 20% at 3 years will be 20% with indexation benefits. But SGB has some different things. For SGB, you get 2.5% annual interest, and which is taxable as per your tax slab. If it is sold any time before maturity, the maturity for SGB is 8 years, and then the short-term capital gain or long-term capital gain will be considered. And at maturity at 8 years, you will get whole income is your tax-free. So you buy SGB only with the money that you can keep it for 8 years. Liquidity means how easy it is to buy or sell or encashing. So gold Bs that's good, is having good liquidity. SGB you need to wait, you need to buy from primary market or whenever the RBI is issuing, and holding period is 8 years. But you can buy in secondary market through your demat accounts. But selling at this point will attract capital gain taxes. What is risk? Physical gold is most risky. It can be theft. There is issue of purity and other logistics. Gold ETFs is much safer. Market, it runs on market demands and supply. SGB is safest, and theoretical risk of default by government is least. What are returns? And the returns are same like your underlying gold, this physical gold. But the returns will be affected by cost of incurring other different avenues. And why physical gold will always give a least return as compared to gold Bs and SGBs? SGB has a bigger upper hand because it pays you annually, and actually it pays semi-annually, but total interest is 2.5. And what best part is, price of gold and share market, they are usually opposite to each other. And historically, if Nifty is giving 12% return, gold gives around 9 to 10%. More or less, it's less volatile as compared to Nifty, and better at short-term frame, and it cushions your portfolio for long-term. So what is take-home message for paper gold? Gold is an essential part of your entire portfolio in grade, and investment should be only considered which is as a paper gold and not the physical gold. You can allot approximate 10 to 20% in gold, and SGB is best option if you are willing to hold this as a position for say 5 to 8 years, and it gives additional 2.5% interest annually. Second best option is gold Bs or ETFs, and avoid physical gold. We consider physical gold as a necessity expense. You buy it whenever you require. As we are obsessed with physical gold, we can't avoid. You consider that as a necessity expense, but whenever you consider in gold as an investment, paper gold, preferably SGB or gold Bs are the best options. Thank you very much. So till we get further things, there are few steps that you need to do. If you are new, open your demat account today only. If you have regular funds, try to convert them into direct funds. If you have all Jivan Anand, Amka Anand, Tamka Anand policies, surrender them in this week. And buy a good term insurance. Before surrender, buy a good term insurance from the company which is having highest claim settlement ratios. Then you surrender your all ignorance policies. Okay.
Thank you. Thank you so much, Dr. Nitin. Thank you so very much for that golden presentation. The best thing about gold is most of us try to buy that physical gold, and paper gold or digital gold people don't consider as a real asset. So as sir was saying, some 10% is lost. Let me just tell you in brief. So the 10% is lost in a way which is called the gold spread. So let us say the gold price is 100 rupees per gram. When you go to buy it, it will be 102 rupees. When you sell it, it will be 98 rupees. So you lose some 4 rupees on buying the physical gold and selling the physical gold, and the GST you pay. So in one transaction of buying and selling a physical gold, you almost lose 8 to 10%, besides the making charges which are meant for jewelries. And theft, and the risk of theft. The best thing with the equity market or capital market, what we call in general, is everything is up to you only. Nobody can steal it, nobody can take it from you. So whatever, the good thing with demat accounts is, I think we are aware of that, your money has to go from your bank account into your investments. Suppose I get your password and I sell your stocks, the money will again come into your account only. Nobody can do anything from your demat accounts or this mutual fund accounts. So yeah, that was actually a wonderful session, wonderful, remarkable session from our eminent speakers. We are soon going to get Dr. Chetan's laptop connected to the projector. Meanwhile, I invite questions. We have some 20 minutes for questions. जावेद जी कुछ कर सकते हैं क्या इसका कनेक्ट कर सकते हैं So I will take few questions.
Sir, yeah, I am Dr. Soren. Okay. So I have a very few years of experience in investment. So I just few questions or clarification about the MPTDS. What I think so something else is lacking. In my perspective, in the MPTDS, market cap is fine. P is just price has been considered. Okay. So instead of P, two more things can be considered in addition to P. One is promoter holding. If promoter holding, what percentage? Yeah, P can be added up. So at least 50% promoter holding, I will be happy. That is not. Second P, which can be added at pledge percentages in the P. Pledge, promoter pledge. Pledging, pledge. Yeah, that is two more P has been added. Okay. Third thing is, of the D MPTDS, D we have considered one minute. Dividend. So what has been told is dividend is increasing. If any company dividend is increasing, there is no chance much of the reinvestment opportunity. We prefer companies who have more of reinvestment opportunities. What it means is, because when the price rises, two things company earns. One is the volume of sales. Okay, if the volume is sell or increase in price. But what we require a company is, the company has a new product, new patency or new geographical area. For that investment is needed. I'll prefer instead of increasing dividend, the company who has a better reinvestment opportunity. Yeah, that should be next. Next thing is, no mention of the thing that the account gimmicks by the company. Because account gimmicks by company might be manipulating the data. So you are fixing only on the sales part, revenue part. But what is important is, if the sales is increasing in the income statement, cash flow should show there is no account receivables. If receivables is going on increasing, that means he is doing account gimmicks. Yeah, I should not like that. And second thing, debt position. Debt has not been mentioned. Again, in D, I will add the debt. If the company has been, yeah, no debts, I will be referring. Next is, exit strategy has not been mentioned at all. Yeah, even if everything, and most of the thing, 10-year history tells, means each business has life cycle. Either in the startup phase, growth phase, matured phase, and the declining or climbing stage will be there. If long duration history is been then, most likely the company has matured. There is not much of opportunity for the rapid growth. As somebody has told the example of Tata Motors reinvesting or recapping of the market. So I will be like little bit growth phase so that we will catch that growth. Next thing is what he has told, averaging down. Averaging down. Averaging down is a much a problem. Yeah.
Can I give?
Yeah.
Sir,
Just to
I will average up the company.
can you answer few questions?
Yeah.
Yes.
Yeah. 2 minutes. Yeah. To adjust as many as possible.
Yeah.
So basically, this was basic investor program. So this was BIC, and I thought 90% of the people here are not they don't know what is demat, what is share. So they don't invest in the share. So we wanted to keep the principle simple. Keep it simple and stupid. So that's why we keep it as a MPTDS. We, in a fundamental analysis, we have ROE, ROCE. ROE should be more than 15%. ROCE should be increasing. So just for the beginners, I kept it is very simple presentation, and that's why I kept only these 5 parameters.
Yeah.
Totally agree. The dividend company which gives dividend is not good, and we don't promote dividend. We should have a growth. The growth should be there. So you see ITC company, the share price is stagnant there and there itself, though it gives 5% fixed dividend.
Correct.
But just many good companies, because dividend, if the company is giving dividend, then they will not invest in further future growth. If you take DMart, DMart is a company which don't give dividend, but it is 10 times increasing from the IPO price only in 3 years. This MPTDS, we just keep it for the beginners, so that once you should enter, you should know you are not entering in a bad stock. Once you are in the market for 6 or 8 months, the Wealthcon have a course like AIC, where you can do further analysis, where we have got 4P model, promoter, pledging, product, and this thing. Based on that, we can say if the company is good or not, profit. So if the promoter is good, we invest. We cannot trust on this Adani's, but we can trust on Tatas. If your company's products are, if you use daily product, you know, HUL, you are using everything. You take a shampoo, you have got oil, everything you have got HUL. So daily product, if you are using, that is a good company. So the presentation could have been made complex, but if we make the things complex, the people will not enter into the stock market. Just to beginners, to understand them, I made it very, we at Wealthcon, this is BIC, just MPTDS. As you go ahead with AIC, you will have we have got MD Sport. So my stocks were only large cap, more than 10,000 cap. If you take for less than 1,000 crore cap, we have got MD Sport model. So for mid cap and small cap, if you are trained enough, we can invest in mid cap and small cap. You have got more return but more risk. So we have got MD Sport, where we have got a DE ratio, debt by equity ratio less than 0.3, market cap more than 1,000 crores. Sports, we have got sales which is going up, profit which is going up, operating margin which is going up. So we have got a MD Sport criteria for that also. But just as many people are not investing, that's why I started.
Okay, thank you. Thank you, thank you.
In fact, remarkable explanation.
We can have the presentation by Chetan.
So
You have
now,
No, it's just a demonstration.
just make it quickly, and we'll take some more questions because we have got another.
so now
program.
Chetan sir is going to demonstrate in real time and on a real website how do you get the best mutual funds out of the 10,000 mutual funds existing in the market today. Over to you, sir.
Yeah, so this is the Value Research Online website, and if you scroll it down, you just can see the VRO tools. And here you can have the fund selector, and so you simply check, say if you want to see the large cap funds, so you check those. You don't want close-ended fund. You only want direct plans. You get all star rated, and you exclude fixed maturity plans and plans suspended for sales, and you update your fund list. So here you can again check that there is a category, the large cap, and you have selected open-ended direct plans of all stars, and you have excluded FMPs and plans suspended for sales. Here again you have direct funds only, and in the snapshot you can then check all these. So if you want to see expense ratio, this is from minimum to higher. So most of the exchange traded funds, they are like passive funds, so they don't have much expense ratio. They mimic the exchange, the index which they are representing. Then you have the net asset. So that's the net asset you can see in the returns. You can see the long term, the 5-year returns, and 3-year returns, and Sortino ratio and alpha ratio in the risk stats. So there is a Sortino ratio, the higher the better, alpha ratio. the higher the better. So this is how, I mean, for want of time, we can even export all this data into Excel, and then you can sort it out in Excel, and you will reach to 2 or 3 funds which you can take up for your as your long-term investment plan.
Thank you, Dr. Chetan. That was quite simplified. I hope it's very easy for all of you. Value Research is a very good tool and platform. So I have few questions for each of the speakers, which I have got some of my colleagues and which I also got as I was going through it. So first question to you, ma'am. Of course, it's really remarkable to have a lady on the desk. So ma'am, you mentioned that direct funds are better for the investors. So most of our colleagues, I believe, agree that we are all invested in regular plans. So would you like to help us understand how can we switch from the existing regular ones to the direct ones?
See, if it is an online regular fund, then you can just close the fund and switch it online. That is easy. But if it is offline fund, then you have to redeem it offline. Then you start a new fund, the same fund online. So as Dr. Ram has told, so without divorcing your first wife, you cannot marry the second one. So you have to redeem the offline and then you have to open the online one.
So is there any simple one-step tool, or that we have to do it again manually, physically, we have to go to a broker and ask them?
Yeah, it is. If it is an offline, then you have to send a request and then you have to close it and,
Redeem it and then start
yeah,
it.
then start it.
Okay.
If I may just add, Dr. Satish, because as I just told, 6 months ago, I was selling in the same boat. I also had all regular mutual funds. So what I did, I opened a MFU account. In that, you can simply redeem them off. The money goes to your account, and you purchase the. If you are okay with the same fund, it is Carissa valid. You simply purchase it via the direct platform. So MFU helps in this.
The other thing I want to ask, I think Dr. Hemant mentioned about greed, not greed, but GRED concept of gold, real estate, equity, and debt. So, Sundar sir mentioned. So, sir, I think many of us would want to know how much should be the proportion of allocation into each asset class.
As I said, the equity component can be 100 minus your age. So in grade, we can say equity can be 40%, 10% can be gold, 10% can be a debt fund, and 20 to 30% can be real estate. Based on your choice. If you have got more knowledge in the real estate, you can invest in more in the real estate.
Dr. Chetan, I want to ask you, these days the concept of index investing and Nifty-based investing is going on. We just saw that the lowest expense ratios are there for passive funds. So would you recommend for a common investor to go for passive investing or an active investing?
No. For passive investing, index funds are very good. Say something which is based on Nifty, you can use them. That's not a problem at all. It will just mimic the return of Nifty. So as the Nifty 50 index is rising, if you see in last 10 years, there is almost quite significant increase in the Nifty index. It will be mimicking the same way. So the expense ratio is less, and you don't have to break your head about that. But when you, as we saw the Carissa criteria, when you have an alpha which is higher, when you have a Sortino which is higher, in the risk times, your return will be more in other funds also. But yes, for somebody who is not yet started investing, or somebody who is new to it, can very well go with exchange traded funds like passive funds.
Yeah, very well said, Dr. Chetan.
Sir,
To the audience,
may I add 95% of the mutual funds will not be able to beat the index. So 95% of the mutual funds will not be able to beat the index, however good the mutual fund managers are. So we should have a balance of both, I feel. But Carissa criteria is quite a strong
so
one to
how
choose.
much proportion you would like the investors to look into passive funds and how much to into active funds?
So the ultimate goal is to get everybody into equities. So mutual funds is just a teaser. So for you to know about the market, to learn about the fund and calculations and numbers, but over a period of the next 2 to 3 years, I think everybody should switch to equity. And I think that is the way forward, and that is the goal of Wealthcon.
That's a really remarkable.
True.
Oh, yes.
So-
As a doctor, we are the top 1% brain of country. And why someone else can manage your money? You are well enough trained. It's just like you learn pediatrics and I learn gastroenterology. That's the only difference. We have not learned finance, which was 7th standard subject. And you can start learning it from today only. You don't need to pay for any financial advisor. It's as simple as it is.
That's
Satish,
well said, sir.
Satish, can we close down? There's another
Okay.
function after that.
So, sir,
There are too many questions actually. Okay, he is being our treasurer. He needs to ask a
question.
question.
Sir, I would please enlighten about that Bitcoin and the cryptocurrency, please.
Sir,
Is it
only one
Bitcoin?
word
Does
I
it
will
come
tell,
under the funds of this mutual funds or any of this
Only
Wealthcon?
one word I will tell about Bitcoin, sir. Not too much of argument on that.
Treasurer, munchitavu cryptocurrency lo.
So I'll just tell you only one word about Bitcoin or any other coins that you're talking about these days. See, every currency has got an underlying asset value to it. So, for example,
No discussion of cryptocurrency and Bitcoin in this session of Wealthcon. Ram sir has told me very clearly, he has warned me,
don't
let's
discuss
not
at all.
discuss. No
We don't
discussion at
discuss.
all.
we'll keep it aside. In fact, I thank all the speakers to have taken dedicated time and have traveled all the way to our PATSCON so far. I thank Dr. Ajay, I thank Dr. Pavan and Dr. Sri Krishna and the entire PATSCON team to have brought this financial literacy and awareness in the most simplified way.
Okay. Can we have a group? Please give a big round of applause to all the faculty.
Sir, 1 minute.
I request
The
President,
bottom line here is, you can see all these people are just simple doctors, not financial experts, but when they could do it, we all can do it. So the main motto of this event was, if they can learn, we also can learn it. And that's whatever has been presented today is no rocket science. It's a simple rule of thumb for people to understand investing. Yes, sir.
you want to wind up? sir?
On behalf of Wealthcon, we thank all organizers and Dr. Satish for giving us this platform to share our knowledge. And what Dr. Ram says and what we follow, we have given you knowledge. Now you have to do action. If knowledge is not transferred into action, it's an entertainment, and we are not Salman Khan.
I request the President of the Twin Cities branch, Dr. Bhaskar, and I request Dr. Surendranath, President of the State branch of IAP, and Central Zone Vice President Dr. Ravi, and myself to have a one group photo. And I request all the faculty to join for the memento presentation behind the screen.
Sir,
Our Secretary, Dr. Pavan.
Sir, until up to say, sir.
Dr. RSV, please come. He is the Secretary of the State and the City. Photographer, kindly adjust all the people to be coming.
Sir, much. Sir, కొంచెం back ఇంకా back. Ma'am, కొంచెం back. Sir, మీరు లోపలికి వచ్చి కొంచెం. Madam, వచ్చేసి. Madam, మీరు పనిచేసి మేడం. మీ సెంటర్ నుంచి మేడం. You are the star of the evening. Ma'am,
Thank you very much.
భలే వారు మేడం. I have never met her.
Please, 1 minute. Other camera. I request all the faculty to join us for the memento presentation. I request the presidents, Vice President, Central Zone to kindly hand over the memento. Photographer kindly come for. Thank you very much. Thank you very much, Enkala. Thank you very much, Dr. Satish, who has come all the way from Vizag for moderating this session. Very indebted to you, Dr. Satish. Kindly join for the memento presentation there. And now hand over the mic for the next session to the moderator. Very interesting panel discussion by the prominent, successful doctor entrepreneurs or doctorpreneurs who have done multiple successful practices in the form of group, in the form of a small hospital, in the form of urban area, in the form of a rural hospitals, in the form of a corporate hospital. So Dr. Sanjay Srirampur is going to moderate this session, and I'll hand over the mic to Dr. Sanjay Srirampur.
Krishna, will you help me with the chairs, please? Yeah, good evening. I request my panelists to kindly come up to the stage. Dr. Rangaya, sir,